And we're live. Okay, we are live in here with Andreas. And what he's going to do is he's going to start coming in on Fridays if he can. And he's going to be going through his system to figure out, what is actually bidding up in the market. And this is going to be very important because, like, you might have heard of reading the tape. He legit reads the tape, right? He not just reads what the NASDAQ tape is printing and what the Russell tape is printing, but he actually goes underneath the hood at the individual companies and, looks at how they're performing and what kind of strength that they have. And then he breaks it up into, what kind of market we're in. He uses 4 different quads, and, it's a real treat having you on here today, and I appreciate you coming on.
Thank you.
So starting with my process, and then I'll pass it off to him, right? We're above previous month 50% NFP Friday. When we come back, we stepped over NFP Friday and found footing on the high part of NFP Friday. We're trying to see, because you can see plenty of times in the past when you start digging into the NFPs, right, like this, or even like this. So right here, we didn't so much step above and find footing on, but we start digging back into the NFPs multiple times in the month. It led to not a monthly slowdown, but a quarterly slowdown, right? So we're just trying to pay attention, and the whole purpose of seeing if it's digging back in the NFP is to see, the strength of the market, right? You're just trying to see, is it starting to slow down from the trend that it currently is on? And that's one of the signs that I use, right? And that would tell me at the end of the month to expect a monthly slowdown versus a quarterly slowdown where we target the 60-day lows. All right. Moving to the weekly, right? In the third week of the month, we still haven't reached above 2.5%, statistically speaking. Once we meet the criteria of NFP to previous month 50%, and we show that we're in a trend, then majority of the time we will end the month 2.5% to 5%, 5% up, right? Because of all that, we know that we can't lock in the low right here, saying this is the low of the week just yet, because we found rejection off the 9:30, 10:30 Tuesday price. We've stepped below the Sunday. We went back above it, which was the alert that this was going to be the low of the week. But to get the confirmation, we would have to be above the Tuesday price, right? We failed to do that. We rejected from the midpoint of that and fell, right? We're still looking for the lows of the day between 5 and 11. And at this point, I'm going to pass it off to you, Andreas.
Yes, thank you. Let me just share my screen here. All right. Let's start out with the GEX put and call ratio. We had a buy signal here. So there's a divergence. Price is up, but GEX is up more. And right now it's positive. Lots of call buying. And so nothing to worry here. I would say that looks neutral to bullish. Let's go to growthy systems. That's what I'm looking at. You could also look at a growth ETF, but I like to build my own stuff. And that's the Russell 3000, which basically tells you that the market is in very good shape. Russell 3000 is mid caps to big caps, 3,000 stocks. So that basically tells me that under the hood, there's a lot of strength and growth. And so because it's a growthy system, it captures EPS, earnings, stuff like that, estimate revisions to the upside. So that looks bullish to me. Doesn't matter where I look, whether I look at the cubes they had. Let me just resimulate that so I get the actual date. We have a little bit of a sell-off because of the situation and semiconductors, but I'll show in a minute that I would worry too much. I'll do that now. So let's go to what is strong and what is weak. You see that here, this is financials. Again, this is the relative strength line, the red line, and the moving average of relative strength is the yellow line. So that's sloping up. And that's the reason why this is filtered out here, because it's sloping up. So the filter is basically looking at, is the relative strength line, the 5-day moving relative strength line sloping up? That's the case. So yes, there's some, tech's not weak, but it's kind of humming along. But as long financials are strong, that doesn't matter. Same thing with small caps. Same thing here. That looks all good. Relative strength is going up. Regional banks, again, I mean, when they're strong, shouldn't be much of a problem. Industrial sector just broke out here, right? This is the daily chart. Same thing, building materials, residential construction. So in here is tech and cyclicals, basically, and financials. And if you count, that's kind of 8, right? Same thing here. Also, cyclicals, financials, and tech. And so this will be quad 1 and 2. They have the upper hand, so that's the reason why I'm still bullish for the overall market. If you look at the quad 3, which would be energy, energy related, yes, something like uranium broke out, but again, it doesn't have the upper hand. And this market so far, the last, I don't know, 12 months or something like that, you were also able to play quad 3 and 4 stuff. So, but overall, I would say that is pretty bullish. Let's go to some breakout trades. What's working right now?
Real quick, I want to kind of explain a little bit more to the viewers, like what you are looking at and what all this means. So let me go back to sharing my screen. You don't have to stop sharing. I'll just turn on mine.
Sure.
Okay, so when you look at his quads, right, and I'm just going to pull this up right here, and this is from Market Radar. Basically, you have quad 1, which is saying that, like GDP's rise or growth is rising, inflation is dropping, right? Like that the credit quality, because we're a debt-based environment, right? Economy is improving. Credit spreads, which we won't get into, is wide and narrow, but that's a good thing. And the opportunity is risk on, right? This is telling, and when you look at his quads, right? Which, let me screenshot that real quick. Oh shoot. We go to your quads real quick. And where's your screen at? Yeah. Okay. So you're looking at me. Will you go to your quads on TC2000 real quick?
Yes. Here we go. So that would be, well, the difference is basically there are 2 ways looking at it. The first one is you're looking at economic macro data and you're looking at GDP and inflation.
Mm-hmm.
I only look at price action, so I don't care. The thing is, I think price action leads economic data.
Absolutely. And that's been proven so many times.
Yeah.
So many research, so much data, year over year, decade over decade, that the S&P 500 leads the economy, right?
Yes.
And so, kind of going back to why his system is very unique, right, is because and I'm just using this to explain to you the different types of economic regiment cycles, right? You
Yeah.
have an expansion, inflation, stagflation, deflation, right?
Yeah.
These two are risk on, right?
This is
So
gone.
inflationary, where growth is rising, meaning people have great access to credit and capital, and companies have the ability to grow. Um, this would have been like 2022 when inflation started kicking up and
Yeah.
rising, and then it went into the stagflationary environment, right? So we injected $9 trillion of QE into the economy, right, which led to growth rising and inflation rising. That's like you as a kid, your dad saying you're in the store and your dad gives you $100, right? Now you have the growth in your wallet to go spend that $100 however you see fit, right? This is a normal economy. This means inflation is always going to move up and to the right. It's always going to go up, and that's a good sign for countries because that shows if inflation is rising, but growth's on top of it, like the growth components, right? That tells you that innovation's happening, that public companies are thriving, small businesses are thriving. It's like there's credit for people to be successful, right? When inflation starts in going higher than growth, that's when deficit spending starts happening, right? You spend more than you actually bring in, et cetera, et cetera. You're still you're still growing. However, you're growing too fast outside of your means, and then eventually it's just like having a credit card, right? Eventually you're going to hit that wall in the credit card where you can't use your credit anymore, and now you're going to be in a period where your whole job is to pay that credit card off, pull, do what, pay attention to your budget a little bit more. The economies are no different than a personal, relationship with his checking account, right? And
Mm.
how he spends money, right? So you have stagflation, and that's when you kind of hit the max of your credit, right? The economies hit the max of their credit. They were not able to bring in enough income versus how much they're spending. Um, so the spending more. So think of it like I said. The best way to think of this is like when you use a credit card, right? But think of this times a billion with individual companies and governments and economies, right? Right. While you're going through this period where you're overspending versus input versus outputs, right? You're stacking on monthly bills, right? Like you're buying nice cars, nice houses. You're not paying for it with cash, you're paying for it with credit, right? Well, eventually you're going to hit your credit limit. And then that's when, growth starts falling, so you can't grow anymore. And inflation, your credit's gone because guess what? Like all those monthly bills that you incurred during this period, right? Well, you couldn't keep up with the payments, and now it ruins your fucking credit, and now you're losing the ability to have credit. The economies operate no different, right? Than that whole cycle that we all operate on, right?
Yeah.
So
And
there's a billion.
basically my, yeah, sorry.
Yeah,
Go
no,
ahead.
no, I was about to go say. So basically, like all the economists, they use all this lagging economic data that comes out
Yeah.
once a month, once a quarter, right? And so they usually are behind what's really happening. They're lagging when it comes to what part of the cycle. And this takes forever to actually work through a cycle. It takes between 12 months and 18 months to go from one cycle to another in an economy, right? What is the matter with, well, there's nothing the matter with economists' ways of doing it. But the thing that I appreciate about how Andreas does, and let me show you a screen again, is that it's a live indication of this, and he does it through industry groups based off of where the momentum that industry groups and sub-industry groups are um, showing will show true growth versus too much growth, too much inflation versus too much growth versus, and he does it. And so every week, at the end of the week, he looks at the weekly close and he makes that decision. I'll pass it off back to you.
Yeah. So yeah, basically, you just showed the economic mirror of what I'm doing price wise, and what's really important. I went into macro for 2-3 years and did a lot of research, followed a lot of macro guys, and basically the result was the market leads everything, right? Liquidity, when liquidity hits, it's easy to explain why the market leads. When hedge funds have more money, when there's more leverage in the market, when they can get more leverage into the market, the market will react first. And when liquidity hits, then you have to build a factory that will take 6 months, 12 months until it shows in GDP. But if there is liquidity and liquidity is hitting the market at the same time, the market is going to react. And so the only thing I need is basically looking at the internals of the market, which is, which quad is basically leading. This would be basically on your chart. That would be, equivalent to the first, second, third, and fourth. And in generally, you can say if quad one and quad two are strong, you have risk on market. And if quad three is strong, you need to get out of the quad one and two stuff. You might want to play quad three exposures, but that's dangerous because the volatility is pretty high. So it's a long short game in that moment, being long quad three exposures and then shorting something like the Russell 2000 at the same time. So being neutral. And quad four can be pretty dangerous too. That's a regime where I would raise a lot of cash, and that can be pretty dangerous. But again, right now,
Exactly. Real quick, let me
yeah,
say something. So, like, if you think about how I look at NFP Fridays, and yeah, think about his quads and what he's representing here.
yeah,
Quad 1, Quad 2, Quad 3, Quad 4, and how it's looking under the hood, right? If his system is printing Quad 3 and, well, Quad 3, that's usually that time of month where we're having, and he's showing that the strongest quad at the end of the week is a Quad 3. It's usually around the time when I'm saying monthly slowdown, right?
yeah,
We're below
right,
NFP Friday, or we're just slowing down. We've maxed out the 2.5% to 5% on the weekly, and we're slowing down, right? Usually he's triggering Quad 2 and Quad 3, right? When we get those quarterly pullbacks, right, where, we're below previous month 50%, below NFP Friday, and we're targeting the 60-day lows, his systems are picking up on Quad 4. When we're above, like previous month 50% NFP Friday, and we're in a trend up, right? Usually his systems are locking in Quad 1 or Quad 2, right? So the industry groups, that's why I like his system in mind, because sometimes our systems will all fire, meaning like there'll be confusion or there'll be, like they won't, like his system might not send this right signal, but then he can come over to my system and see what my systems are reading. Sometimes, like, remember a couple months ago when we were stuck between NFP Friday and previous month 50% in limbo land? Like my
yeah,
system was off, but his system was saying, "Hey, no, dude, like just wait for the turn and then start buying it back up and put, so like
yeah,
that's what's important about his system is it shows to the finest, like better than my system, what is actually happening to these individual companies. Because remember, economies operate off of consumers and companies, and we've lost reality of that, right? We've lost reality because we're in a world of easy money, but at the end of the day, economies, right, don't thrive unless the consumer does and unless the companies within that economy does. Because a
yeah,
government can only inject so much free money into an economy for so long without companies actually being innovative and growing, and consumers actually making money and spending, and et cetera, right? So
Yeah.
that's why the system is more important than my system, because it's showing the breadth of number one, the consumer, and number two, the companies within the economies. But I'll pass
Yeah.
it off to you to go over some breakouts.
Yeah. Let me just show you the back test, right? Obviously that, where the line is right now, that's the back test for that day. Obviously, yes, we had a turnaround, but that was still quad 4 and quad 3. So clearly risk off. Let's just see how it changes. Right? So you have another positive day. There's some stuff coming up in the quad 1 and quad 2, right? The cube started to pop up in that moment, right? Because the slope of relative strength started to go up. Now, right, go a day further, and that was the day where I started to pay attention, because quad 1 and quad 2 started to go up, right? Next day, and here we go. I got bullish here. I got bullish the next day, right? So in my blog post I wrote, this looks good, right? Because quad 1 and 2 pops up, that gets better and better. Again, absolute perfect. You get in here. Now it's really leading, it's really blazing, right? Okay, let's see that. Again, still blazing, no worries. No worries. No worries. Now it gets interesting. Now it starts to get interesting, because you have a reversal day here. This is still super bullish. Quad 3 pops a little bit up. Now let's see. All right, you see that? That reversal day, that's basically the first warning for me, because quad 3 and 4 are popping up. Oh, okay, it's just one day, so no worries. Coming back, but now it turns. Now you will see that it turns. Okay. You see that was a moment where I said, okay, guys, it's not the end of the world, but quad 3 and 4 is taking over, so I reduce exposure. Right? So, and then again, on that day, obviously it was totally quad 3 and 4, but on that day I went bullish, because from here, that was 3 and 4 again. Now it improves. This stuff's coming up, and now it improves again. So I also look at rate of change. You see that? How that changed? And I went bullish here. Got a little heat here, but basically since then I've been bullish. I added somewhere here, but that's kind of the idea. So it's a trend following system on what the market is pricing in, right? Is it pricing in growth? Is it pricing in inflation? Is it pricing in deflation? And all that kind of stuff. That's the idea. So, and with the options I'm looking at, and with systems, that's obviously you get whipsaws. Sometimes it takes a while until they turn. You might be you might be on the wrong side of the market for 2-3 days, but the major trends you capture with it.
Yeah, and that's the thing. There's no system out there that's not going to push you through the ringer here and there, right?
No.
Your job to be successful and consistent over time with managing your own capital is realizing that, and realizing that the decision making process that you go through and the mindset that you have when making those decisions is more important than any system that you can find out there, right? So when you're going through the ringer, right, and you're being whipsawed, like, does it make sense to like just exit all positions and put your hands up and freak out, or does it make sense, to give it a couple of days, see how you close the week, et cetera, and take that tactical pause, set the conditions for you to make the proper decisions under using emotional intelligence and what you've already known, versus, just setting your stop below whatever structure point that looks good, and next thing you know, you've been eliminated out of a market that continues in the direction now, because when you trade equities, your pricing matter counts, right? Like where you price into that equity really, really counts, right?
Yeah.
You don't want to give that up just because of a little bit of shake and bake, right? You
Yeah.
don't want to give up your pricing if you get a good price because you got razzle dazzled, whipsawed around, like period, right? So you have to build these systems that allow you to see clear and concise, because right now, most of my viewers, you're just trying to learn how to pull consistent money out of the market through the
Yeah.
futures. But eventually you're going to pick that up, and that money is going to compound into bigger and bigger and bigger and bigger, right? And then you're going to be like Andreas, where like you're throwing 1,000 shares at this company and 1,000 shares at this company, and you don't want to pay the commissions for 1,000 shares just because you had a bad decision making day, right? So
Yeah.
when he's going through those days where the market's going flat, or we're doing a monthly slowdown, which is one of the reasons why I think he likes my system, because it tells him, or is this a really serious pullback, or is this something I have
Yeah.
to give a couple of days
Yeah.
in?
Yeah. Yeah.
Because like that allows him to save thousands of dollars in commission fees, right? In equities. But
Yeah.
that's amazing. All right.
That one more thing. That's a situation where the quads got it wrong, right? So it was clearly quad 1 and 2, and then we tanked. So, but after that day, right, it started to turn, right? So you will have to get a little bit heat, and that was the day where it turned, right? So you don't get from whatever from here to here, right? And that's like 3-4%. But then the trend was clear. The trend was absolutely clear until we got to that point. Right? So that's it. Thank you, Mickey.
All right. So when you go into a little bit about, like I don't want you necessarily to go into like what trade you're in now, but go into like what you look for when it comes to breakout trades and all that, and like what when you actually go to pull the trigger on individual companies, like what's your criteria and what you're looking for is.
Yeah. Okay. Let me just. Okay, so what I'm doing with the quads is basically I use 90% of still systematic. So I use stuff like that and build systems and trade them. But for example, in that moment, quad 4 hit, I started to hedge my portfolio, right? That's just to mitigate the drawdown here. So quad 4 hit here. Then it got bullish here again. Here it got, bearish again, and here it got bullish again. So I'm basically staying the course with my systems, and I just hedge them all. That's like 90%. Then what I'm also doing is I'm using a screen in portfolio 1, 2, 3, which is a lot, right? It spits out 619 stocks. It's basically the best top 10% earnings revisions the last 13 weeks, right? I copy them, I put them to TC2000, and then I have another filter here, basically, right? So those are those 600 stocks, and I'll filter them out. I know this screen that I just showed you has a positive expectancy. I also could use systematic, but then I try to pick the best patterns. And let me just go through.
So he's filtering them out. So he's using the different industry groups to say, hey, want to risk on environment, right? You should be
I only do
putting
breakout
capital on.
trading when I'm in risk on. I only do
Yeah.
that. I might do it with quad 3, but then I have to concentrate on energy stuff, right?
Yeah,
Because
exactly.
in quad 3, energy is strong. But in quad 1 and 2, I don't care about the industry group. I only look at the stock, and I basically, again, I select stuff that has good earnings. It really doesn't matter much. Your screen. I mean, there are so many. You have to also make sure you can't follow the whole market. I mean, I tried it. It's impossible. You have to limit it down a little bit. bit. So whatever, something like NCLH, it's a quad one stock, right? So it popped up here in my selection. At the beginning of the day, you have like 3, 4, 5, 10, 15 stocks. So you go through them. I have a little time. I look at it pre-market. That's the reason why I went in here, because it popped up pre-market. Pre-market action looked good. And then what I look at, I want to see clean hourly charts. That is not so good. Well, it breaks out and it comes back. But this one, right, that little breakout on the hourly, it holds, it flags out. That's what I want to see, basically, right? Sophie, same thing, right? If you look here, also growing like crazy the last 13 weeks. So you see that blue line support. So it breaks out and doesn't violate that blue line here, basically. That's clean action. And then I took it here and went, and the sell point would be, can show you on another one. Let me just see here. Yeah. So I wait, basically this could be a sell point here, right? So it has like blue line support here, and then I raise the stop, raise it until it basically gets triggered. So if you look at PDD, took that one as well, right? I had blue line support here, but it didn't go, so I'm out very quick. So that's kind of what I'm doing. Breakout trading. So yesterday, if you look at the quads, you get great idea. So let's just go to today, real time. All right, so biotechnology is strong right now, right? So it shows me it's bullish trend. Relative strength line is going up. When I then see a breakout in that industry group, like, where is it? Fold. Yeah, I know I can take the breakout pretty with higher conviction, because it's bullish. In general, it's the market is in a risk on regime. The GEX is showing nothing major is looking good, and then I can take the breakouts. I mean, I can show you my list here. I did a little, I over trade. This is like the last 3 weeks. So I had system breakouts, something like made $7,000. This is my momentum trading. That's like 2,700, and that's altogether what I basically realized. So I do statistics because I can't backtest that, because it's discretionary, and the position size are still, if you look, for example, at Fold, you will wonder, why the hell did I only do $416 when I'm up, whatever, 10%, right? That's the positions are pretty small, because that stuff is new to me, and that's the reason why. So I'm exploring this. I built my own patterns on the hourly and on the weekly. So something like that is perfect. I call it blue line support. Again, it breaks out and doesn't violate that weekly, the law of that thing. I also do that on the hourly, and then basically, yeah, I look if it's risk on or risk off. If it's risk off, I don't do that. I might do quad 3 things if it's quad 3, but I'm careful. But if it's risk on, those breakouts work pretty well. That's kind of the idea.
Yeah, and the biggest thing is like, so he will hold anywhere from 1 hour to 30 days with these companies, right?
Yeah.
Now, the companies that he holds for 30 days are a lot less than the ones he holds for 1 to 2 days. Like, after going through this so many times, like, there's certain patterns that you pick up on these companies. Like, they'll pop and they'll display after the pop, they're like tighten up, volatility will contract, and then they'll pop again, right? And then just continue to do that for the next 30 days. That's usually due to good earnings, some kind of news catalyst that makes them a competitor in their space, or they're taking market shares from other company competitors within that sub-industry group. That's what, because institutional money's pulling out of those ones and into that company, right? Or like they'll pop, base, and fizzle out, right? Meaning whatever that news catalyst, whatever that thing that made it pop, after further research was done, saying, okay, maybe we overpriced into the company, like the news catalyst, and we need to put it back into reality. This is the proper price levels, right? So, like, the reason, like, it's impressive the way he does it is because for us futures traders, we look at 1 to 3 assets. Like, we look at NASDAQ, gold, and maybe crude oil, right? And our job is just to master how they perform. So it's easy to say the 9:30 to 10 o'clock, 90% or 70% or 80% does this, right? Or the daily profile, what it does in Asia, London does this for New York, right? But he's looking at over 7,000 companies, and he's having additional variables and past go, no go, his screening process, right, out of 7,000 companies, right? So there's a lot more room for error, but he's been doing it so long and he's got such a systematic process that he's successful at it. No, he does not do options. Everybody, like, I'll tell you just from working in the industry, like, most of the time, the options that you can trade are very, very, very much skewed against you, because that's not the point of options, especially intraday options or intra-week options, are not there to design. They're not there to promote growth and yield in a portfolio. They're there as a hedging tool, and I think is probably the most illegal thing Wall Street ever did was open up these zero DTEs, dove retail, because it's so skewed against you and just of taking your money, right? If you actually know how those things are priced, like, you realize, like, there's not much alpha in going long a short duration option. There's actually way more alpha selling premium. But then if you're wrong and you don't know how to do it right, they'll come repo your house, your car, because you sold something, you borrowed something, and you didn't have the capital to pay for it when it was time due, right? So now they have the legal authority, right, to come and freaking take everything you own, and they do. So no, he
Yeah,
doesn't trade options.
yeah. Mickey, let me add, just it's not all glory. I want to really make sure that this is coming across. So my biggest weakness is basically I sell before my stop loss sits. So I got in here, the action was perfect. It's a small cap, was a system trade, or the system suggested it. This is perfect action. It pops up, huge volume. It holds that line. I got in here. I sold here. That is aftermarket. That's the reason why that price is not showing anymore. But I sold 50% here, and here, altogether 50%. Then I wanted to hold. Here was my stop loss, and I did sell exactly into the hole. Right. That is one of my biggest weaknesses that I still have to overcome. I'm so risk averse. It's really unbelievable. Second
Well,
weakness is
listen, like,
I hesitate to. Yeah.
one thing that will help you with that is, like, is for us to trade live together. Like, not live on, like, YouTube or anything, but once my schedule facilitates it, like, I'll be able to tell you, like, I'll be there to hold you accountable, just like you
Yeah.
will hold
Do
me
that. Yeah.
accountable, because I know a
Exactly.
lot about
Yeah.
this
Same
style of
thing with
trading.
second weakness is
And
position size. So
hmm
I had like suggested was like 25K. I only took 10K. So this could have been, I don't know, instead of a 7K trade, this could have been a 20K trade. So
so
it's not all glory. I'm still learning.
yeah.
But the reason why I want to do that is basically, with systematic trading, I'm able to squeeze out 25%, 30%, something like that after tax, year after year, which is fine. But I know I know a lot of discretionary traders who make much more. That's the reason why I want to learn. All right.
And the biggest thing is, like, like, it's always easier to trade with somebody who knows your systems. They might not trade exactly the same way as you, but kind of like we were doing before, I started working for the institutions is like remember me, you and Steve, I'd give you the call outs of what I saw at the end of the day. You'd call out the breakouts at 9:30, like all that stuff, right? Because like my systems, like for example, right, looking at that, right? You bought somewhere in here,
Yeah.
right? And if you look at it, yeah, I would have sold that too. Because this is getting really sloppy. There's no
Yeah.
strength there. Like this is getting sloppy. I would have totally sold this, especially
Yeah.
the price component, right? Because
Yeah,
even
but
though this
again,
says
it
a
didn't hit
dollar
my
ninety
stop
six,
loss.
huh?
Yeah. It did
But it
not
still
hit my
hasn't hit
stop
your
loss.
stop loss. Yeah, no,
Yeah. Yeah.
no, definitely. I would have my stop probably would have been below this 930, but this
Yeah.
would have shaken me out based off the size of the company.
Yeah.
Um, because you guys think this is a dollar 95, maybe you got in at $1.60, you got a 30% profit, right? But you're in thousands and thousands and thousands of shares, right? Like there's absolutely, but each one of those shares come with commission and wiring fees and all that as well. So you have to remind yourself that as well. Like if anything else, just remember that you're going to be like getting charged for that mistake, and your profits are even going to take a hit, whatever profits you got, because of the commissions that you're going to be paying on that.
Mm.
So I would say like there's a lot in equity trading. Like there's a lot more value to break even than stopping out in profit, right? Because of that, right? So if I'm gonna have to pay the commission for my shares as well, and let's say I take it from this 930 to where it currently is at, right? Like I'm okay, like moving my stop, figuring out what my commission rate's gonna
Yeah.
be for the amount of shares I have, and then moving my stop to break even. So if it dies, it dies, and then my commissions are covered, right? So that's maybe a
My stop
mindset.
was at break even, and I sold
Yeah.
before. That was a mistake.
Ah.
I had again the first 50%. I had like 70, 80%. Right, that was
Mhm.
7K trade, and then I kept the. I said, okay, I'm going to sell on strength, and then yeah, I sold the last 50% right into the hole before my stop
Mm.
loss on that trade was done. So I have to work on that.
Yeah.
Yeah.
Well, one thing that will help you and it helps me is hopefully that company goes 2,000% today. Right? Because that's the lesson. That's the lesson that
Yeah,
usually helps
yeah,
people in that to have like hands of steel. As long as you know, as long as the environment that got you into that company has not shifted, there's no reason like getting weak hands because that's remember what's happening on the back end of that, right? The workflow system, right? Like what I do for a
yeah,
living, right? You have
yeah.
executing broker, clearing broker, prime broker, and collateral and margin. What's happening? You have to give yourself a 2-day grace period because what you have to realize is what was the ticker again?
SNAL.
SNAAL.
Yeah,
Remember, right? Like, and this is what I do for a living, right? Is all this attracted a lot of institutional buy-in.
yeah,
For the
exactly.
next 2 days, now institutions are dipping their toes in the water. It's 2-day process for them to fill those orders and get them booked and pass the systems, right? So you've got to give yourself a 2-day grace period after seeing a breakout because this is all noise. It's not like they're trying to trap traders or flush people out or anything like that. They're
Yeah,
just trying to facilitate the life cycle of trade orders from this move attracting people, right? So that's what this is. So I would give myself a 2-day, maybe on the third day, then decide. Obviously, move it to break even, but you got to realize remember, after most break evens, I mean breakout trading, right? You sit there and you base up and down for however long, right? Then you have the pop, right? And then remember, I sent you those statistics to show you day 1 of the pop, day 2, day 3, day 4, day 5, and then day 6 through 12 is usually the true show if that company is going to be successful or not, right? You have to think about that. But on day 2 and day 3, you've got to just stop looking at the company, because what's happening is they're facilitating orders and they're trying not to break the orders for all the institutions that bought because of this,
Yeah.
right? Because remember, the institutions have enough capital that if this is a failing company, they can sustain that, right?
Yeah.
But
That's the
right
idea.
now, it's the reason things base, right? Like we call it basing, right? Is because that workflow system is happening. Like we see the price, what you don't see is what's happening behind the curtain, and the
Mm.
chaos is happening behind the curtain because of this move right here, right?
Yeah.
So these slowdown periods where it whipsaws, right after it breaks out, that's just them trying to fix orders because of this move, right? So you have to, in the back of your mind, you don't need to know exactly the 100 steps of life cycle of a trade order as a 2-day process, but you have to remember that, as long as it's not giving the initial breaking point away, like you have no reason to
Yes.
sit there in pain.
Yeah. Hundred
Just move
percent.
on. And a lot of future traders deal with that same issue, right? So, for example, right, one of the systems that I've got them working on right now is how many times a day, like if this is the RTH session, right? Starting right here, this is the 930. This is the constant variable, like for reversion to the mean, the 930 on the 1 minute, right? And these are the hours, right? And each
Mm.
blue box are the minute 5 to minute 9 of the hour to make decisions around, right? They're trying to figure out, right? Is that day below the 930, then obviously momentum's down, right? And whatever statistics that we put on our charts, right, will reflect, this move, right? But your job, because this is an expensive market, right? So like you could sell right here and be blown out of your account right here if your leverage isn't correct
Mm.
over this little wick, right?
Mm.
So you have to be very smart with your leverage. But like the one thing I'm trying to teach them is like if you did sell up here, is it smart to exit it when you see us get above? Because like think of NFP Friday and previous month 50%, but on the hourly chart. Like, is this getting above previous hour 50%? And this would be NFP. This is a complete momentum shift. Maybe that short you took here, it's time to get out, right? Right? And
Mm.
or is this going to be a reversion to the mean day where we make it all the way back to the 930? Or are we going to sit there and range all day and base all day, right? Because the market condition has to align with the risk profile, meaning you need to be a certain type of trader, just like you discussed with your quads, right?
Mm.
Your quad one, the way you trade in quad 1 and 2 are completely different than how you trade in quad 3 and 4. But we
Yeah.
try to do it on intraday because, like, you only have so many hours in the day, and because this is a very expensive market, right? Meaning, like, point value, right? You have to be able to pick up with those things. That's why I think a lot of the people in the future space would do fairly well using non-leveraged shares and going over to the equity space. But the one thing that will hold them back is the fact that, like, it took you forever to build those quad systems and figure out momentum, right? Which is the ultimate driver of everything in industry group momentum, right? That screening process of industry groups and what risk on and risk off periods you're in, like that's what kills a lot of retail, right? They will come in here on a quad 3 and try to buy breakouts that happen from the 930 move, even though all momentum is down in the tech sector. And it's like, dude, you're not aligning the market condition with the risk profile. But yeah. Anyway, I'm gonna end it with that, and like I look forward to you coming on, and hopefully we can do this every Friday because I think it's very important for people to see what's under the hood of the asset that they trade intraday, and then I also think it's important for them to learn how to diversify their their money, right? It doesn't make sense just to go put all your life savings into intraday NASDAQ. That's probably the dumbest thing you can do, but it makes sense to like spread out your wealth into different styles, even physical assets, right? So it's good to
Yeah.
for them to have some exposure to
Yeah.
somebody who actually does it completely different than they do.
Yeah. 100%. I mean, I have a lot of, I don't know, even day traders, breakout traders who say, okay, I have a 401k and, I have liquidity issues with my trading because their account is so big, they can't trade whatever they're set up anymore. And then they ask me, okay, how should I invest my money? And then I say, okay, we have in portfolio 123, we have a lot of, very, very good systems that beat the S&P 500 and at the same time are very risk averse. So
Hmm.
as you say, and you do that, you do the same thing, right? You have a
Yeah.
401k and split the money
Hmm.
up. And
Yep.
the idea is basically to make money, in spaces where the liquidity is not so high. And then if you
Yes.
hit the threshold, you take money out and go to the longer term investments. Yeah.
Yeah. Longer term investment, dividends,
Yeah.
physical like real estate and stuff like that. Absolutely. And that's one thing that people don't realize, especially younger in their journey, right? Like SAO, which is a very liquid stock for the price, right? But when you get into these, like Oliver Kell, right? Like he's a dude that does this quite successfully, right? But he's hit the point because now he's trading NASDAQ the same way and he's
Okay.
making god awful money. But like he's hit the point where he can't go into SAO and capture breakouts, right?
Yeah.
That way because he has too much liquidity, right? So he only trades like blue collar stocks along with the NASDAQ because he has a bigger account and like it would take days for him to put on his positions, right? Same with Steve. Steve has a multi-million dollar account, and that dude got so sick of the liquidity issues and all that, where he's like, I won't give out all his, but he pretty much is option selling premium on a campaign, but way longer term than most people. But and he's pulling 5 to 10% a month, which is very, very well for the size account that he has. Just doing that. So
100%.
like it's for the viewer to, like do their due diligence and really figure out what risk averse and what systems that they prefer and where they're at within the portfolio size and take advantage of it, right?
100%. Yeah. Let me just show you one of those
Yeah.
systems we have. Basically, uh, if you go to this one, yeah. Expected dividend growth is out of sample since 2017, speeding the S&P 500. And if you then use the quads and hedge it out, it's even better.
Mhm.
So stuff like that we have on Portfolio 123. If you're interested, you can schedule a call with me one-to-one. And again, I have a lot of traders who say I hit the liquidity threshold. I want to have a solution for longer term trading, and we got stuff like that, right? And what I do, I basically I do my small caps, and then I go step by step the liquidity threshold higher. I go to Russell 3000 mid cap and bigger cap systems. So the higher the liquidity constraint, the bigger the edge. But something like that is for a family account, 401k account, cost average into it, and we have a lot of stuff like that.
Nice, nice. Do you guys have ETFs on there?
Yes, we have ETFs on that. Let me just see. I have to watch I have to see it.
Because I know there's a lot of traders who don't want to deal with the hustle and bustle of intraday trading futures, or they don't want to deal with the actual individual companies, and like they like to, just trade. They just like to open up the whale's mouth and swallow all of the companies within that industry group, and they do that through ETFs.
Yeah, let me just can't find it right now. probably next Friday I have it.
Okay, no worries. I do have
yeah.
to cut this stream and get to work and all that, but this was great, man. I really appreciate you